Yeah, good day, guys. It's been a long time. I hope you guys are good. I hope trading is going well for you. And I hope you are trying your best to stay consistent and most importantly, to put your emotion in check. Today I said I was going to make a video to break down my Gbpusd swing using my logic and including how I got my entries with time and price. Uh, with this move, I was able to make over $15,000. And what is more interesting here is the fact that my entries were actually very tight for this expansion. Do you understand? So I use some Confluence that are not actually new, but only few people still consider it today. Although I'm going to highlight them during the process. Now, remember how I trade, right? I told you guys that my idea, like the basic LPT logic, is that I predict the next impulsive candle, right? That's what I do. I have a model that when I see it, it suggests the next direction of the candlestick that is going to form. Do you understand? It means that when I see my model, it's going to tell me that the next daily candle should expand bullish, or the next weekly candle should expand bullish, which is the example of this one, or the next monthly candle should expand bullish. Do you understand? So that is what my model does. And I can tell you 80% of time when I predict the next expansion, I get it right. Because this is something that is totally different from how people see trading generally. Right? It's totally different from the idea of I'll have to wait for a week structure, the market return back to OB, and all of those stuff. You get me? But this is just basically idea of using a logic and a model that suggests for you that this next candle is going to be bullish. I imagine that if you can actually predict the next weekly candle correctly, you know how much you're going to make from the expansion. If you're a day trader and you're able to predict the next daily candle expansion, you know how much you're going to make. Do you understand? So this is a logic that makes a lot of sense to me. And that is how I've been trading my logic using my what? My model. Let's get to business. If you look at GBP I don't want to be moving back to confluence with DXY because basically DXY is like what I trade. So I just use the information of DXY to trade GU and EU. Get my point. GBP if you move to the weekly chart, 'cause that is where it was hired from. You look at the weekly chart, you see that um market is actually at this point, because this was the expansion I predicted this candle. That's me how I was able to get this was the candle after my model. It's already suggesting the next candle to be bullish. This was the bullish candle, right? And I got the entry just here. I'm going to explain. So, or the whole of expansion here, I got it. I'm still in. And this one also predicted this. So I got another entry around here too, which I actually call in the live session. The live session we did where I break down EUSD and GBPUSD. I called an expansion explaining the using the concept of time and price that okay, we are expecting the expansion during New York session, and this particular one I got the expansion during London session. Do you understand? I've told you exactly before that you can only get entry to either you get your entry during London key zone or you get your entry during New York key zone. That is what I do. You understand? So from here we've seen the market rallied and it's more or less like a brick of structure. And with what I have on the monthly charts, I was expecting a bullish expansion because we already had deep discounts and there's a liquidity here that was taken. So I was expecting a bullish candle on monthly, right? So just needed the turnover. So after this Y, when market is already bullish, right? Already moving to the upside. So at this close of this candle, let me so that we can see, although there is not actually necessary, I can just zoom out. So you can see after this candle, we had this candle, we had this candle, right? Then the close of this candle was here. So that was when I predicted that because using checking from the weekly, the monthly, and the daily, my model is already suggesting higher prices on both weekly and monthly charts. Do you understand? So at this point, I just need to wait. So the market closed like this, and you can see that even when market expanded, we had what? We had a fair value gap, not just a fair value gap, but inversion fair value gap. What do you mean by inversion fair value gap? Which means you had a fair value gap here that was validated, right? A fair value gap here that was validated. So, and you still now have fair value gap on the other side. So it means that it's going to use this as what as support. This fair value gap was supposed to be used as a resistance initially, because if the market is actually still bearish, it means that when market go to this fair value gap, market is supposed to turn and continue, but the market violated the gap. So the gap is actually still here, so it will be serving as support, right? So the market, when this go inside here to cover the fair value gap, and market close bullish with this long rejection. So I was suggesting market to be bullish for the whole new week now, which is where my trading pattern comes from. Do you understand? So I was suggesting the next candle to be bullish. That's literally what I do every week, every day, every month. You get me? So let's move to how I was able to break down this candle and how I was able to enter this trade, right? If we move to daily charts, now this is the last candle. Do you understand? The one that actually closed with rejection, which is actually this. It's actually this one. Do you understand me? I mean, this particular candle yes, can say that we had the market, we had a break of structure above this, then this rejection close like this before the next one continue. So if you look at the daily chart, yeah, so this was this that one that actually closed like this, right? So the rejection we got from that month and weekly, this is the rejection, which means that if I'm going to predict my next candle, it has to be around here. So saying this already, I already know that this particular candle is a sponsored candle, which means that the expansion to continue this leg is going to happen on this candle, inside of this candle. Get it? So if you move to the 4 hours chart, now you see that this is some kind of book of structure, and looking generally, you already know that structure is actually going fine from here, right? And there's another pattern that I can advise you guys to backtest. Something I still use most of the time, right? When market is already forming a structure, higher highs and higher lows, higher highs and higher lows, you can definitely wait for when market is going to take liquidity by actually breaking structure to the other side. Let me make a picture of what I'm trying to explain. We know we've got higher highs and higher lows, higher highs and higher lows, higher highs, and have something like this. This is a sweet pattern that you can actually use to trade, which means that at this point, market of some higher highs and higher lows, so this had to be a manipulation to gather more liquidity, in the sense that once we see this book of structure, a lot of people is already what's changing what structure. And at the same time, there will be traders that will be here trying to buy. And when market is bullish, they will always need money to keep moving higher. So the idea of this particular pattern is to what? Is to seek more liquidity, to grab more money, than to continue. So the people who are going to buy here will be a victim of the liquidity, and the people that will think this is a book of structure that will be trying to sell will also be what? Be victims. So definitely there will be a lot of liquidity and a lot of money around it, which will be what? So, which will be enough to push price in the right direction and continue going what bullish. So now that is the idea that is happening here. See, you've seen higher highs and higher lows, and value empty. We had this market here, right? So we had market break above this inside a what? A new order block, and expanded by breaking structure. So this was where I was already looking for new what? New entry, right? I was looking for new entry for my expansion. And if you look at this point, this is actually Tuesday, and Monday. This is actually Monday. This was Friday. This was like how the market closed the candle before the one I'm about to predict actually closed this week on Friday. Let's check this candlestick: Friday, Sunday, and Monday. So this was how the candle actually closed, which means that uh, good, good. So this was the rejection we had on that weekly chart, right? That means this was how the market closed. Then the next week, I was trying to predict the market to be bullish. Here is it, right? Number one thing you need to understand, I've explained to you about the concept of what is it called, power of three. Power of three is a concept that um you only understand on the higher time frame, right? And you only understand on the lower time frame. I think most people have no idea of power of three on the higher time frame. You understand it? And then I'm telling you, if based on the fact that the way I actually trade is by actually predicting the next candle, which means that before you can use my logic, or before you can actually conclude in this kind of what is it called, price action, this kind of analysis and this kind of trading style, you must understand candlestick anatomy. You need to understand everything about candlesticks, time and price, time of expansion, consolidation, and all of those stuff. Now, on a weekly candle, just trying to break some part of my stuff for you. On a weekly candle, if a candle is going to be bullish and you're expecting a weekly chart, power of three states that when you market open at a price, you gotta have manipulation, right? You have a consolidation, then you have manipulation, and then you now have your what? Expansion. You understand? So we have manipulation, consolidation, one, manipulation, two, expansion. Now, this is the same thing on the higher time frame. Do you understand it? That is on the weekly chart, the monthly chart, which means that if a weekly candle is going to be bullish, you understand this? If a weekly candle is going to be bullish, ideally, or you expect that market will do something like this. And why doing something like this? This manipulation, right? This consolidation might happen on what? On Monday. You have Monday, Tuesday, Wednesday, Thursday, and Friday. So the consolidation will happen on Monday. The manipulation will happen on Tuesday by actually seeking the low of this consolidation. And from Tuesday, Wednesday, can have the expansion, and Thursday, market might then decide to um, consolidate again. So this is the idea behind don't trade on Monday, don't trade on Friday, because Monday is going to be used for what? Consolidation, which means that if you are expecting expansion on Monday, you might get it wrong. You just take stop loss because Monday we do what? Consolidate. It on Tuesday, then we have manipulation, market to expand. The same reason why people say the high of the week will form on Tuesday, or the low of the week will form on Tuesday. Because why? When Monday consolidates, Tuesday we do the manipulation and form the high. So that is exactly what happened here while I'm trying to predict this card. So on Monday, we had this formation, and on Tuesday, market opened and went below all of these lows. And at the same time, confluencing with what? With three drive, if you understand three drive. And that's not only the confluence. From last week range, definitely there will be an internal range, definitely. If you have seen the video on internal to external range liquidity and how I explain it, it's actually totally different from how others explain it. So I advise you to go to my channel and check internal to external range, the relationship between internal range and external range liquidity. You get my point? So you see, you will definitely see what? Definitely see an internal range from last week expansion. You understand it? So confluencing this and week two. 21, sorry, 1, 2, 3. So this is the third one, and this is where you should be expecting your what? Your expansion. Do you get my point now? So don't get lost. You know that I was predicting this particular week. You know, this is the week now. And where is Friday? Let me take this to, okay. Yeah, this is Friday. So this is the week I'm predicting to be what? To be bullish. This range. Do you understand it? And on Monday has done the what? The consolidation, which I want. And on Tuesday has done the what? The manipulation, which I'm actually expecting, and form the what? The low of the what? Of the week. Low of the week. So we have the low of the week here already. Now, where is the low of the week coming from an internal range of what? Of previous week. Don't forget, just like a daily internal range and external range, when markets takes a liquidity above external range on a daily, the internal range is within the what? The previous daily candle. So the same thing on the weekly, which means that this particular expansion in the week, the internal range that is available after the close and at discount is only this point. It's only this fair value gap. So that is where you reference for this week. And the fact that is everything is happening the way it's supposed to happen. Monday come as the consolidation, then Tuesday will happen to be the what? The manipulation. Because if you are going to look bullish on any pair, you have to buy below the opening price. And if you are going to be bearish on any pair, you have to sell above the opening price. Now, this is the opening price of this week, and below the opening price should be your what? Your entry. This is the opening price, and below the opening price should be your entry. So if you want to buy, also mark out the opening price. Below the opening price should be what you should be referencing as your what? As your entry. That's where you can get your entry from. So we've seen this already, and we're already here on Tuesday. So on Tuesday is where I got my entry, and exactly at what? At London Keystone. So you move to Tuesday and you move to now. Can see here now. What I'm going to do next is what I was expecting entry, and at the end of and at the same time, everything still formed perfectly because I usually like to buy, especially when I'm expecting a bullish uh, candle, or when I'm expecting a bullish expansion. Not all the time, but if I'm lucky that market was able to come below Asian session, because Asian session is also part of my logic to trading, then definitely I'll be looking to buy. So now I'm going to mark my, let me delete this already. So I'm going to mark my timing for expansion, which is what these things I'm giving you, say premium content. I just hope at the end of the video you sit down, understand, and backtest it. So this is from 2 to, let me change this ones to red. Let me delete this one. But there's no need. So this is like the beginning of the week. This is Monday's price action and Tuesday, right? So this is 2 and towards uh, 7. That is where you get your entry from. Good. Do you understand? So you see that it's not random, and the confluence is not just about the internal ring that I have, but it's about the timing. Do you understand? If my internal ring was actually below here, right, and the timing is not wrong, it's not right, rather, then I will have to wait for the market to expand to that particular level at that time. Which means if the timing was wrong here, it might actually be doing what New York session, which means that the expansion will come below. So what is most interesting here is the fact that the internal range was actually confluencing with what? With what? With the timing, with the timing of price. So now, if you look at it, you see that immediately market entered the internal. I did not enter from there, right? Ideally, it's something I can enter and put my stop loss here. Do you understand it? But I did not. I was actually on screen completely that day. So I just waited. So immediately market enter during my what time for execution, market enter and immediately I've seen markets moving. So where did I get my entry from? After this break of structure, my entry is right above this candle. Do you understand it? That is, my entry is right above this candle. Do you understand? Immediately I had this break of structure, this particular above this candle, that is the close of this candle, right, was actually my entry because we already have break of structure. So if I'm going to risk, I can enter here and put my stop loss below here. Do you understand it? You can imagine using this small stop loss to swing a whole weak candle. So I entered just, that's another mode of entry. Do you understand? I have many mode of entry and I was able to swing completely. Whereas, uh, yeah, Friday, I think it was for the whole week. Yeah. So this was it for that, for this entry. I entered from here, but don't forget and even my entry was actually what, still within that time. Do you understand this? Don't forget it. So that timing is the most important thing. The confluence from previous week range, confluencing with the time of expansion or times of entry on this particular week. Confluencing with what? With 3 drive. Because 3 drive is something that I've been using even since my retail days. I might not be adding it to my chart, but if I actually see it in the confluence I reference, and I will actually suggest you guys also use. Do you get me? So my entry is, sorry, okay. I don't know why that's happening, but I think we can continue now. Yeah. So the 3 drives confluence I used since my retail days. And the timing I was supposed to enter from there, but I still waited for a break of structure and why market was already below Asian session. Do you understand it? So I had my entry just after the close of this candle that break structure above. I will show you the entry. You will see that it's exactly at this particular point. So I was able to swing for complete day, for complete week. So, but in this particular trade, I really did not make much. I think how much I made like 5K from this swing, but the entry was actually where I made more because made over 10K from the entry. So this was actually the initial first entry. The second entry, I missed it. So I want you to pay attention to this. I told you guys that when the market is forming structure, high structure, low structure, the best time to actually trade is when they actually return to take more liquidity. Do you understand? So that is, market return back here, seek liquidity below here. So market will start buying back. So it's just a book of structure and back to internal need for the expansion. So here would be a manipulation for a lot of traders, because when they see market break structure, they start looking for selling opportunity to grab more liquidity. So market continue again until here. You see it until here. And what do you think happened here again? The same thing that happened there is what happened here. You can see we had this, and we also have this low. Although this low was actually protected, not enough. Do you understand? So this low was protected but not enough. So that is why we had a liquidity grab there. Do you understand? So when we had this liquidity grab here, it's more or less like the same thing that actually happened here. After market is already showing higher highs and higher low, higher highs and higher highs. So market was able to come below. So after this point, then you see the continuation. So my entry was supposed to be just here, but I missed it. I honestly missed it, and it was very, very painful then, but then I missed it. So when I already missed it, the market was already going. That was when I had my new entry in the second day. Because more of the reason why I missed, I think this was Monday. So I was not expecting it to be very fast. So I was not actually paying attention on charts. Do you understand it? So that Monday. So on Tuesday was actually, I was already showed that, okay, market is ready to move. So this was the one I called for you live on during our weekly outlook on Tuesday. Do you get my point now? So I told you guys that, okay, I think I still have the same mark. Yeah, this is exactly 7 to 9. Exactly 7 to 9. Yeah. So I think my entry was just right above this breaker. Yes, so above this breaker here. I think I've entered here already. At that time, you can see this is still the timing. So I think I've entered around here already. And then since the market then expand. So my entry from there was there, and then my stop loss was here. This was the one I gave live to my signal. I called it in the live session with you guys, and I gave it the entry to my signal guys directly. So this was the one I made um over 10K plus. Yeah, you understand? So swing for that. So I was supposed to have a new entry here, but I missed it. Because it's going nowhere. So I'm able to enter here again. So now if you look at it, you see that it's almost the same pattern, just that I missed the entry here. Do you understand? So this was the second week candle that I actually predicted, which means that, I predicted this to be bullish. Then when we add this formation, right, and with my logic and model, I was able to predict that the next week was going to be bullish, just that I was not on chart on Monday. So I was expecting this week to be bullish. So, and I got the entry too. Now, just two in this particular window, I predicted 2 weeks to be bullish, and I got what? The bullish move. This is how powerful this logic is. See how powerful my model is. So he said that this is not even about a market break, and they said I was not talking about market break, return to OB and all of those stuff. I don't do it. What I do is what? Focus on the candlesticks and wait for the expansion, and you time the entry. So that's exactly how I trade every time. So this is how I got my first entry of over $5,000. Need about $5,000 here, and here over $10,000. I will show you my entry at the end of this video, and you see that my entry is exactly at the same point I marked, exactly above this particular high time. So I hope at the end of this video, be able to relax, calm down, and do what? Understand this breakdown, right? And study it. Because I said a lot of things, talk about the price and time of price, talk about the, what is it called? The inversion fair value gap, right? Talk about my expansion. Do you understand it? And I talk about three drive. I talk about when market is moving, right? And you're trying to get entry. Just wait for when market will want to change bias. That way, it is just to accumulate it. We call it reaccumulation. Do you understand? Reaccumulation. And the ability of the reaccumulation is what? Is to place pains on current long orders. Do you understand? That is, if you're actually longing from here and you see the market is actually selling, you play pains on you such that you will be moved to quickly close your position and think the market is changing directional bias. The same thing here. The primary purpose of the accumulation is to place paints on what? On what? On first orders. Do you understand? Current orders. That is, if you're actually looking, if you're actually buying from year before and started seeing the market is coming down, it breaking structure, you want to actually close your trade and start looking for what's selling opportunity. And meanwhile, you're using that as an opportunity to grab more liquidity. You get my point now. So that is what I have for you today. I hope you learn from it. I'll see you in the next class. Have a great trading day. And make sure you drop a comment if you're able to learn one or two in the comment section. And make sure you follow, like my video, and share. Do you understand it? So I'll see you guys next time.